Have you ever seen a trading strategy work wonders for someone else, but when you try it, the results are completely different? You might think you did something wrong, or even suspect that the market is working against you. But that's not the case. Every trading strategy works well under certain market conditions. If you don't adjust in time, even the best strategy can lead to losses. Trading isn't about following a fixed formula. It's a game of strategy where your ability to adapt determines your success. In this video, I'll share 5 crucial tips to help you adjust your trading strategy so you can thrive in any market condition. If you want to trade more effectively and avoid getting stuck in the same mistakes, make sure you watch until the end. Let's get started. Tip number 1. Observe and analyze price action. Imagine you're watching a basketball game. Your team has a solid strategy, but suddenly the opposing team changes their playstyle. If you don't adjust immediately, all your previous planning becomes useless. Trading works the same way. If you rely solely on a fixed system without paying attention to how the market is evolving, you'll get left behind. Most traders spend hours fine-tuning technical indicators, tweaking parameters, and testing different formulas. But they often overlook the most important factor: price action. Nothing replaces real market experience. When you truly observe price movements, you'll notice the earliest signs of change before any indicator can alert you. Start by keeping a trading journal. Write down what you see: recurring price patterns, key moments when the market shifts. Over time, you'll realize one thing: the market is not as random as you think. Success in trading isn't just about following a fixed system. It's about understanding the market and spotting subtle changes before others do. Tip number 2. Combine systematic and discretionary trading. If you've ever watched a high-level chess match, you'll notice one thing: the best players never rely on just one plan. They have strategies, but above all, they know how to adapt. Many traders fully rely on systematic trading, fixed rules where buy and sell signals are generated based on technical indicators. But here's the harsh truth: a system only works when market conditions align with it. Systematic trading helps with discipline and removes emotions from decision-making. But when the market shifts, you need flexibility. Use your system as a map, but don't ignore the actual terrain. If the signals on the map no longer match reality, be ready to change direction. Tip number 3. Always have multiple backup strategies. Imagine you're coaching a football team. You've designed the perfect game plan, but 15 minutes into the match, you realize the opposing team is playing differently than expected. If you don't have a backup plan, you'll be overwhelmed. Many traders make the mistake of believing they just need to find the perfect strategy, but there's no strategy that works all the time. A great trader, like a great athlete, must be able to perform under different conditions. When the market is trending, use breakout or trend-following strategies. When the market is ranging, focus on support and resistance levels. When volatility spikes, switch to news-based or reversal strategies. And most importantly, backtest your strategies. When you've tested and validated multiple approaches, you'll never panic when the market suddenly shifts. Tip number 4. Be flexible in trading. The market doesn't care about your strategy. It has no obligation to move the way you expect it to. Imagine you're rowing a boat. If the water is calm, you paddle in a steady rhythm. If the current gets rough, you adjust your strokes. But if you keep paddling the same way, no matter what, you'll eventually capsize. Stop obsessing over a single strategy. Learn to recognize early signs of change, react quickly to market conditions, and be willing to adapt when necessary. The best traders aren't those with a secret formula. They're the ones who know when to switch things up. Tip number 5. Manage risk effectively. You might have a great strategy, but if you don't manage risk properly, one mistake can wipe out your entire account. You can't control the market, but you can control how much you're willing to lose. Set a risk limit for each trade. Never risk more than 1 to 2% of your account. If you manage risk well, losing trades will only be small waves. They won't be able to sink your boat. Trading isn't about finding one big win. It's about learning to survive and grow, trade by trade. We've now covered 5 essential tips to help you trade more flexibly and effectively. But remember, knowing is one thing. Applying what you've learned is what truly matters. Trading isn't about being stubborn, nor is it about looking for an easy shortcut. It's about those who learn, adapt, and control their risks. If you want to become a real trader, you don't just need a good strategy, you need flexibility and discipline. Now, I have a question for you. Which of these 5 tips do you think will impact your trading the most? Drop a comment below and share your thoughts. And if you found this video helpful, don't forget to like and subscribe, because I have plenty more valuable content coming your way. Thanks for watching, and I'll see you in the next video.